Hey guys, very good morning, Fabio here, hope you are all doing well. So in this video I am going to be discussing multiple time frame analysis, what it is and how to essentially conduct it. So without further ado, let's dive into today's video and I hope you guys enjoy. So to begin with, what is multiple time frame analysis? Well, multiple time frame analysis is essentially already what it says. It's self-explanatory. Because what you do when conducting multiple time frame analysis is that you use multiple time frames, so for instance the daily, the 4 hour and the 1 hour as confirmation for your trades. So in today's video I want to show you guys an example of how I conduct multiple time frame analysis on this pair, which is currently Euro USD. So to begin with, what I always do is I just start out on the daily time frame, and on the daily time frame we can currently see that we have seen a trendline break. So we went from this downtrend, which was also a descending wedge. And as you guys should know by now from my previous videos, and for instance, the video on channels and wedges, a descending wedge with the 1, the 2, and then a third trendline touch is a sign of potential bullishness to come. So when you see that, the channel starts breaking out, we start seeing a breakout in towards the highs. What you can then do is, instead of buying over here on the first bullish close outside of the wedge and then setting your stop loss underneath, for instance, the candle and get your stop loss hit, is wait for price to retrace. And where did price retrace towards? In this particular scenario, price retraced perfectly in towards this imbalance candle, which essentially is a rally, a base, a rally. So then diving in towards the 4 hour, because of course we can't really enter on a daily time frame, especially if you look at this daily time frame over here, you can really see that the structure is just a little bit too small to really take a specific trade from, especially also if you wait, for instance, for candle confirmation and then you want to enter on this candlestick with your stop loss underneath the lows and then targeting, for instance, resistance, your risk to reward will be very poor. So what we want to do in these kind of situations is dive in towards the lower time frame, so for instance the 4 hour. And what we can see is that that daily zone is on the lower time frame, essentially also a 4 hour zone in the form of a rally, a base, and then a rally once again. So once you see that price retraces perfectly in towards that basing zone, you can then potentially anticipate on the fact that there will be support forming within that zone. Next thing that you want to do is draw on your fib, for instance, and then what you'll see is that the 618 Fibonacci level aligns beautifully with that 4 hour basing structure. So now, just turning off my 50% body candles just to make the chart a little bit more clear, we can now start looking for essentially our entries. So if we now look at this 4 hour chart, what we can see is that we have of course some base forming once again in the form of a drop, a base, and now potentially a new rally within the near future. Especially if I'm looking at this kind of market structure, what I already know in advance is that when the market is consolidating, as we are currently doing over here, I am expecting there to be a big move. Well, in this particular situation, where am I expecting a big move? In which direction? Of course, in towards the highs. Why? Well, we have the 618 fib retracement alongside the 4 hour basing structure, which is also a daily basing structure, and we have a breakout out of that descending daily wedge. So in these kind of situations, what you can now do is start looking for an entry. So if you want an entry, dive in towards, let's say, the 1 hour time frame. And if you then look at the 1 hour time frame, well, of course, it is not very clear in regards to the price action. But what I like to do is, for instance, mark out the area of consolidation, dive into, let's say, a minimum or the maximum of 15 minutes, and then look on the 15 minute for a trend switch. So in this particular situation, you essentially have the downtrend with the lower high over here, lower high, low, and then essentially over here, some sort of an inverse head and shoulders, right? So let me just mark that out for you guys, make it a little bit more clear. We have an inverse head and shoulders over here. So in these particular situations, once I've spotted that lower time frame inverse head and shoulders, I know that once we reach the support level of that left shoulder, I can start looking for an entry. So let's say we take an entry upon this candlestick over here because of the right shoulder being formed and also a double bottom being formed over here. Price moving up, going back down, and then moving back up again. We can look for that entry, place, for instance, your stop loss underneath the zone, go back towards, let's say, the 1 hour time frame. And then what you'll see is that, or even the 4 hour, and then what you'll see is that if you now target that previous level which we had. So let's say on the daily and look for resistance forming, which was essentially, let's just mark out this level over here and dive back in towards the 4 hour, mark out that daily level over here. What you can now see is that you have a risk to reward of 1 to 4.64. Now looking at the trade playing out, we can now see that we get that much better entry alongside a much better risk to reward, mainly due to the fact that we dived all the way in towards the lower time frame and conducted a proper multiple time frame analysis. So yeah guys, that is that for today's video. The chart just jumped away, my apologies for that, but I hope you guys enjoyed today's video. If you have any questions whatsoever, make sure to contact me through Discord. I am happy that I was able to help you guys out, and yeah, speak to you guys soon. Thanks guys.